Welcome to Real Estate Live, where your questions get answered. We get to the point of the hot topics that everyone is talking about 3 times a week. We go live at 9 a.m. Pacific time on Monday, Wednesday, Friday on YouTube and Facebook. I'm your host, Andrew Finney with King Realty Group in beautiful Las Vegas, Nevada. Today's hot topic is about the health of the housing market in 2020. To make a comment, please use the chat box on the side. If you want to join us on the screen live, please use the link in the description below on both Facebook and YouTube. So I'm super excited to get into today's content, and we got a wonderful special guest getting ready to come on, Brandon Mendoza with Coldwell Banker Realty. And I believe he told me it was Salado, Texas. He did correct me. He said, Texas got their own little twang on how they like to talk. I thought, well, okay, let's go ahead and get country and let me say Salado, Texas. So let's go ahead and get Brandon on, and we'll start discussing the housing market and the health of the housing market and taking your questions real time. So please, absolutely, let's start getting into it, and let's have a wonderful session here today. And let me get Brandon up here on screen with me.
Hey, good morning. Good morning, everybody.
There he is.
Hey, you said it. You got it right. Salado, Texas. Well, good morning, everybody, and I'm glad to be on the show. Thank you again, Andrew, for inviting me. It's an honor to be on the on your show, and I hope I could add value to your audience.
Well, thank you so much for taking the time and coming on. I love getting perspective and insights from different agents around the country, loan officers. And, I'm still just dying for someone that watches the live stream to say, hey, you know what? I'm going to actually click that link in the description and I want to pop up and let's have all of us having a real conversation. I think that's just so cool. So That's why I keep making that link available. I just think that would be awesome to get everybody else. So I wanted to go ahead and address 2 of our wonderful people that watch a lot of the live streams or perhaps listening. Pug Love and April. Good morning, ma'am. It is great to see you. And thank you so much for tuning into the premiere of the Hernandez family's home buying reality show the other day, Real Estate, The Untold Stories. I am super excited that you're part of that. And in the course of that series, I actually go over in detail the 14 major milestones of the home buying process. And, it occurred to me as I was watching some of the future episodes, sometimes I don't know if I get into too much detail. I just try to keep it as real as possible of what to expect. So they're very educational. I just was going for a little bit of hopefully entertainment there. And good thing Adrian is, it's a good thing that Adrian is very lively.
I think I watched the preview of it. I have yet to watch an actual episode, but yeah, he's very lively. Yep. Is he prior service?
He is prior service.
Yes.
He's former United States Marine. So, that's part of the fun there. And he just is a firecracker. That's just him. Every time I talk to him, it's just him. He's just awesome. So Drew's Enthused, thank you for being here. Yo, I'm glad you're here. So let's get into some questions as they come up. And before we do, let me go ahead and share Brandon's contact information with you guys if you are looking for a home around the Salado, Texas area. So I'm going to bring his screens up. He does have Instagram. And of course, everything is linked in the show more description for your convenience. If you'd like to follow him on Instagram and check out the post of him and his family and the stuff that he does, because Brandon is also a former military, are you not?
Yes, sir. Yep,
so
U.S. Army.
There we go. So another military, U.S. Army. And thank you for your service, by the way. He also has a YouTube channel where, thank you. He has a YouTube channel that he's starting to do stuff with. So if you want to check him out and listen to his insights about the Texas market, specifically around Salado, Texas. And then also you can go on his website and actually see the different types of properties and how far your dollar can go there. I was looking at some of those homes, to be honest with you, and I was like, oh my goodness, prices and what you get compared to Vegas. Oh my God, some of these homes are absolutely stunning. And I'm like, why can't we have that here in Vegas at those prices? But it's okay. But everybody, all of the great stuff is actually in the description below. So Meseret Binti, I see you. Thank you so much for joining us. I've seen you on several times with us as well. It's great to have you. And Meseret is saying, love your positivity as always. I love the fact that you, Pug Love and April and Drew's Enthused and other people that keep tuning into the live streams are here and working with me as I get my live stream legs underneath me. You might notice that I talk to Brandon and say, hey, Brandon, I had some really bad audios, unfortunately, this past Monday, and I feel awful for everybody that was watching. And Angie Cole in specific, my special guest, super amazing lady and agent out of North Carolina. I just feel absolutely awful. I'm going to have to see if she's willing to come back on or something, because I would love to have her on. She's a tremendous agent. But that said, I did get a lot of insight from some of you in the comments letting me know, Andrew, wear a headset and ask your guest to wear a headset, and it'll get a lot better. So thank you for your support and encouragement and guidance and helping me know how to live stream. Lynn Brown, thank you for being here, Lynn. Lynn says, good morning, Andrew and Brandon, watching from New York. Always informative. God bless you. And you as well, my friend. And thank you for being here with us, Lynn. I hope everything is going well in New York. I know Governor Cuomo is looking at doing strategic openings in your market. And that's exactly what we want to talk about today as a housing market 2020, about everything that's going on with people's life across the United States, how the governors are responding to potentially opening up at least some states in some capacity so people can get back to work. It's a very real concern, and there's a lot of misinformation out there, a lot of fear mongering, unfortunately, where people are trying to profit off of people's put negative energy out there, scare people, and take advantage of someone's fear and profit off of it. And I just think that's a lousy and very gross thing for people to do. So it's more about having a heart of service and compassion and empathy to what people are going through right now, and making sure that we put out the right information. And I got to believe at the end of the day, Brandon, and tell me how you feel about this. I got to believe at the end of the day that love does truly conquer all. And I also have to believe that at the end of the day, truth wins. And right, even though there's a lot of misinformation, I think that by consistency of going live and inviting great agents like yourself onto the stream with me, I think that's how we do that. What do you think?
Absolutely. I mean, you're absolutely right. It's, you know, when you love somebody, you want to make sure that they have the right information. You want to make sure that they have the right information to make good decisions for their families, you know, and buying a home or selling a home is a really big life-changing situation. And having that information, especially for what's for right now, is great, so that you can make the decisions and make informed, rational decisions.
Absolutely. And I think that if more of us approach each other from a spirit of love, joy, and hope, I think we're always stronger and better together than we are not. And a big part of that, in my humble opinion, is to always approach people with love, joy, and hope. And the reason being is that if we focus on what makes us alike, then we can use that as a foundation to come together and understand those things that sometimes we may be a little bit not the same about. And right, using that foundation of similarity shows that we're all human, and that we all have the same concerns in life, and we all have the same desires and ambitions. And it's about coming together, because to me, everything that's going on right now is realistically like an opportunity that we have to recognize what's most important in life. And real estate is just one part of a life story. And that's how I came up, Brandon, by the way, if you're curious, with the real estate, the untold stories with the seller and the buying family, is that in practice, it's always, real estate's just part of the process of their book of life. It's just a chapter. Mm-hmm. And the more that I began to understand that early on in my real estate career, is the better that I started to do as a real estate practitioner, because I wasn't even focused on the property except for what they wanted, right? I was focusing on what they wanted. And I'm still the same way. And I just keep refining and trying to get better here, but really just listening to people. And I think that if we listen to each other now with COVID-19, in addition to like the housing market, and we listen to the facts, then we can have a worthwhile and productive conversation moving forward, supporting each other. Those are just like my thoughts on the matter. I just think it's about bringing people in. And Morris D, I see you here. Thank you, Morris. Good morning to you as well. Morris says, good morning, Andrew and Brandon. Really appreciate you jumping on. I am starting to get really familiar with some of the wonderful members in our community on my channel, and I love it. I love the community relationship, and I look to grow the community. And by the way, I am really struggling, in case any of you have a great idea out there of what we should name our community. I would love to name our community. I mean, we're 18,500 and growing strong. I'm thinking, what do we call ourselves? We don't have a name. Your vibe attracts your tribe, and we need to name our tribe. So we got the vibe. Now let's name the tribe.
Name the
So
tribe.
anybody, right? So anybody that has an idea about that, please let me know. It's actually kind of tricky to figure that one out. So I just like to know what you guys think. That's why I do all this. And
hey, I want to make
Rocky,
sure I told Lynn. I want to
go
make
ahead.
sure I told Lynn good morning, because she said good morning to me, and I don't want to interrupt you either, because this is kind of new to me. And then also good morning to the guy who made the comment before, and good morning. Yeah, there we go. Yeah, good morning to Morris. Good morning.
Awesome, Brandon. Thank you. And Rock Yell Brody. I might be killing that. Rocky L. Brody. It's just like Salado and Salado and everything we were talking about, Texas, right? I will give it half an opportunity. I might not always get it right, but I'll darn sure try. So Rocky L. Brody says, hi, Andrew, local Vegas agent as well. Wanted to pay my respects for your knowledge. Hey, thank you so much for joining in. And I'm glad that you're here. And if there's anything I can do to support you, especially in the Las Vegas marketplace, let me know. Here to help. So Cass Story, Cass says, thank you for being here, Cass. Cass says, hi, we were hoping to buy this spring, but we've decided to put it on hold. Curious what the market in Cleveland, Ohio will do in response to the quarantine. It's a very interesting question, Cass, and I think that it has more even applications outside of just Cleveland, Ohio. So why don't we turn to Brandon and see how the quarantine's affecting people in Texas, and then we can have a more robust conversation here. Brandon.
Well, the quarantine in Texas, it has affect showings and stuff like that, because there's, we did in the beginning, there was real estate agents we're not allowed to go. We're not allowed to go and show homes, but now we can. However, based on my market, home sales, well, I can't really tell what April's going to do, but in March we had more home sales than we did in last March of 2019. So, I'm working with a buyer right now. They found they needed a house because the house that they're in is too small, and they need something bigger. And we went out and looked at homes, and they found the home that they wanted, and they put it under contract. So I think I don't see any major, based on what I've seen before this pandemic, basically the pandemic, it has affected the real estate market, has affected the mortgages, really has affected the mortgages. But I feel like that the markets, once this is done and we kind of adjust fire and find out what's, once we kind of get used to the new norm, I think that we're just going to pick right back where we left off.
That's a good point. And Cass, when you're talking about Cleveland and Ohio in specific, a lot of the states across the United States, as we know, are facing different hashtag stay home movement, which I'm a full supporter of, by the way. But I also recognize and have a tremendous amount of empathy to the people that have been furloughed and the people that want to buy a home but are uncertain, kind of like your situation that you're like, hey, maybe I should put this on hold. I have different considerations about this topic, no matter where somebody is in the country, Cass. And I would just ask you to take what I say with a grain of salt and ask yourself the questions so that way that you can get to the heart of the reasons why you're buying and what's most important to you. One of them being is, number one, if you have job security and you don't foresee any kind of furlough or layoff in your future, then you're in a very stable position to be able to buy. The next thing is to understand where the rates are. I was having a couple of conversations with some of my really awesome clients that are presently in contract with new home construction here in Las Vegas yesterday. And they were asking me about the market. And I said, hey, let me ask you a question in specific mortgage rates. And I said, let me ask you a question because they're a little bit more experienced in life, shall we say, than I am. And I said, when was the last time you saw the Fed cut the rate down to 0.25% for the rate that they allow lenders to borrow from? And they said, I've never seen it. And I said, how do you think that affects mortgage interest rates? And do you think that if that rate was 1% to 2% or greater, that the Fed was allowing lenders to borrow from, would it increase or decrease the average interest rate? And they said, well, obviously, if it was higher, it would be higher. I said, absolutely. So I'm not confident, obviously, that the mortgage that the Fed's rate of 0 to 0.25% is going to be around for too long. And if you're in a position to buy due to stability, and you're in a position to buy and you're comfortable with the situation and you have the right agent helping you, then you're going to be able to take advantage of a low interest rate in the present market. You also may find some sellers may be a little bit more open-minded to different negotiations. Not saying they're going to take a complete bath, because one thing that I'm learning, the more that we stream together with other great agents like Brandon from around the country, so far, there is a common denominator trend of everyone that's been on in the last month saying the same thing. There's a very high buyer demand that is pent up. There's a lot of nervous anxiety about getting into the market because of the unknown, which is fear of the unknown, right? False evidence appearing real. Best way to replace fear is with knowledge, because with knowledge comes power, and with power comes comfort and confidence, leading to a well-informed decision. So where am I going with this? I've listened to people say, Andrew, or no, they didn't talk to me specifically. They're out there doing their own live streams or making their own videos or whatnot. And I've heard them say, hey, the sellers are just going to keep listing their home, and we're going to have a glut of inventory on the market at the end of all this, and no buyer's going to be able to qualify. That's just not the case. What I'd ask people to do is do what I like to call #JTAB, just take a breath and take a step back to reassess. Because if we look at this logically, why would a seller list their home if they didn't believe any buyers were in the market? That's point number one. Point number two, we heard about JP Morgan Chase and the large banks, Wells Fargo and everybody else out there that have increased their minimum FICO score to 700 and now requiring 20% down payments and such to be able to get a mortgage. Are they the only banks in the country? Point number two, no. A lot of larger regional ones that operate in excess of 30 states, are very much providing loans to borrowers that are qualified down to like 600, 620. So it's more about the debt to income ratio. What is their job security? What is their situation? So that's point three. So when we look to Brandon's statement earlier, when either this coronavirus passes, right? Or when people start adapting a little bit better, and I think that we as a nation are starting to adapt better, and I think we're seeing that now a little bit better as time goes by. The shock factor is wearing off, and we're settling in and making smart decisions ideally. But what you're going to find is a lot of buyers that are in the market that want to buy, but you're going to have the same situation with a low inventory market. So Cass, if you guys have job security, and it's a position in life that you're comfortable with, right? I would suggest that you gain clarity and really ask yourself deeply, why do you want to buy a home? What are those reasons that you want to buy a home? How is buying a home going to affect your life? And then based upon that decision, ask yourself about your comfort level. If you're wondering about the comfort level, there's a lot of ways to show a home. I've been doing it for years. I'm sure Brandon has done it as well, where I give one-on-one video home tours, very specific, very live, just like we're doing right now, to a client. If that's your comfort level, and that's the seller's comfort level of the house that you guys want to make an offer on or that you're interested in, then why not do that? And if you find yourself in a position that it makes sense and you're comfortable and confident with moving forward, Cass, then please move forward. But if you're not, then don't. At the end of the day, no one's going to put a gun to your head and tell you that you have to buy a home right now. So that's not what any of us want. We want you to be happy. We want you to be comfortable. We want you to be confident. And we want you to understand that by asking yourself to gain clarity, because clarity is king at the end of the day, let's make sure that we have that clarity piece in place. And that will help lead you to making the right decision for you for the reasons that are important to you. Okay. So Cass, I hope that helps. And I just want you to think about that. And if it makes sense, great. Okay. So now let's move on. Living with D. Living with D says, hi. Hi, Living with D. Micah, thank you for being here, Micah. Really appreciate you coming on, my friend. Micah says, hello, first-time home buyer here that started a new construction in January 2020. Target close date of 6/23. I pulled the trigger after watching many of your videos telling me the definition of fear. I'm glad that you brought that up after I was just talking about that. That's funny. Universal mojo, huh, Micah? So fear, everyone, false evidence appearing real. And I'm glad that the videos have been helpful to you, Micah. And I'm glad that you were able to feel comfortable and confident making a well-informed decision that's right for you. One thing that I'd ask you to do, especially since you mentioned that you're in new construction, okay? I think that's awesome, and I'm super excited for you. But what I want you to do is, hopefully, since you said you watch many of my videos, you have your own trusted real estate advisor. And if that's the case, and even if that's not the case, what I want you guys to do is to contact the builder. And obviously, if you're working with your buyer's agent, then I would like your buyer's agent to have this conversation, okay, that represents your best interest. And I'd like to know that with that specific builder, if the market for some reason does take a turn that I do not foresee, realistically, I don't foresee it for so many different reasons I keep sharing in the live stream. But if it did, what happens if you're in a contract at, let's say, $300,000, and now the lender has dropped, or excuse me, the builder has dropped the prices of their new homes to $275,000? Are they going to honor the $275,000 prior to your closing if this happens prior to your closing, right? Or are they going to try to hold you to $300,000? Because my guess is they're going to either drop it to $275,000. Now, that's me playing the devil's advocate, because I believe in looking at the logic of a situation and making sure that we cover all bases. Back to my foremost point, I do not at this time believe there is going to be a crash in the real estate market. I keep saying this. Why do I keep saying this? In 2008, we got to look at history to learn from it and look at the changes since that time. There were stated income, stated asset loans. There were no income, no asset verification loans. There was very lax debt to income ratios. People were actually rolling in their buyer closing cost and down payment on top of a mortgage. Okay? Stupid practices. And people were crazy. I mean, there's more than enough shade to go around for everybody in that situation. It wasn't all the lender's fault. It wasn't all the real estate agent's fault. It wasn't all politician's fault. It was also consumer behavior's fault for getting greedy and thinking they could speculate the market and earn $100,000 in 6 months, even though they had never earned that much money in their life. And yet they were able to qualify for $1 million home. So after that, you saw different legislative measures when President Obama came into office, specifically with Dodd-Frank, which created the Consumer Financial Protection Bureau, which then started holding and regulating lenders more stringently, that made sure that they now had to verify your income, your assets, credit, and employment for any loan product, essentially your ability to repay. They also had to give you what's called an amortization schedule to let you know the cost of said loan over the life of that loan. So when we look at how many people right now are filing for mortgage forbearance, because that was a question that comes up a lot too. And I think Pug Love in April asked that question last, and it was a great question. And she had said, hey, you know what, with the mortgage forbearance, what happens in 6 to 12 months from now if those people aren't able to pay back the thing? Well, the lending guidelines, as we know, anyone that's watching, are constantly gelling, and they're working on getting it gelled and solidified exactly what that repayment term is going to look like. Is it 3 months, 6 months, 12 months, 3 years? Does it tack onto the backs of the mortgage? Right now, we don't know just yet. That's why Bill Marin comes on live with me on Monday and Wednesday to share that information with us. All the same, here's the reality. And this is what baffles me when we take the step back, Brandon. This is what baffles me. Okay? Unless you bought that house in the last 12 to 18 months, if you were in between a rock and a hard spot, that either, well, it wouldn't be a short sale, and I'll explain why. The foreclosure, right? And you knew you were going to miss 3 payments, which is a kickoff to a notice of default, which is a kickoff to a foreclosure proceeding.
Yeah.
You have equity in your home. Sell it.
Yeah. Yeah.
It's common sense. If we sit back and think about it, it's common sense. If you're in between a rock and a hard spot, didn't say it was going to be fun. No one said it was going to be something that you really wanted to do. But would you rather go with foreclosure, or would you rather cash out the equity that you've built up in your house over the period of time that you've owned it and get out of Dodge, recoup, rest, relax, reassess when you do have your job security back, and then go purchase something else if you're so inclined to do so? It baffles me that people are saying all these foreclosures are just going to glut the market like 2008. It's just not the case.
Right. Yeah.
If I thought it was, I would tell you that. And if I think that's going to happen, you'll be the first to know, because I go live 3 times a week. It's just not the case. And that's where I get so animated and so angry at fearmongers. You know, Brandon, if you buy my training for $97 a month, I'll teach you how to take advantage of the market. If you pay $1,000 a month, I'll teach you how to make yourself a millionaire on foreclosures and buying those properties. If you pay $10,000, I'll give you VIP services and you can be welcomed into my inner circle where I stream live directly to you and answer your questions, teaching you how to trick out the market. How many of those have you heard?
I've heard a lot. Yeah. Yeah.
It's a shame.
It's just common sense. Common sense. If if you're not in a position to be able to keep the house, sell it, to get that equity back. You don't want to give the equity back to the bank. So
Exactly. Thank you for making that point. Morris D, thank you for letting us know what the rates are looking like today. He's saying today's rate is 3.25%, 0.183 discount points. That's actually really good. Should I lock it today? This is for a 20% down payment. That's definitely something that you need to review very closely with your loan officer and ask them about any floating options that you might have available to you, the float your rate, just in case it drops a little bit lower. It may or may not. It could just spike up. We don't know. That's what Bill's been talking to us about on Monday and Wednesdays during the live stream. So great point, Morris. 3.25 is it's a really good rate. Just saying. So that's
and this is my this is my opinion. I mean, if you're comfortable with that rate and the payments make sense to you and they fit your family's budget, then absolutely lock it in. Those, to me, in my opinion, those are really good rates. I mean, I just bought the home that I'm in now, and I believe I locked it in at 3.65, and this was in September, October. So, as soon as I heard that, I was like, yes, I'm locking it in, because it fit the budget, it fit the family's budget, and yeah, if it makes sense to you and the payments make sense to you, then absolutely.
Fantastic. And Morris, just for everybody watching, and if people are just joining us now, thank you for tuning in right now, by the way. But when Morris is talking about 3.25 rate and buying 0.183% discount points, hey, that's freaking awesome. But I want everyone to understand the reality of rates. When you see a rate out there, if it says like 2.75, 3%, 10%, it doesn't matter what it says, right? I want you to know that that is realistically what I would term as a teaser rate. And here's why. When you look at the actual rate that you could get as a prospective home buyer, it is dictated upon your own economic situation, from your credit score to your debt to income ratios, to the type of loan that you're getting, to the loan program that you're using. Mm-hmm. So I want to keep it real, because sometimes people say, hey, I saw a 3.25 here, but this lender said they can give me 3%. Do they have your last 2 years tax returns? Do they have 2 months of your bank statements? Did they review your 1 month of your pay stubs? Did they have the conversation about what loan program and actually put you through a true pre-approval process? So please don't be fooled. Just know that rates are ultimately changed person to person. Now, if the prevailing rate is around 3.25, fantastic. Then we know that's what we're working off of. But what it ends up being could be better or worse, depending, like Morris was talking about buying a discount point there. Then that's something that you need to have a conversation with your loan officer about. So I just want to be real with you about the rates, because too often people get it twisted and, they're like, I got a 580 credit score and I want that 3% rate. And I want that down payment assistance program. Wow. First of all, down payment assistance programs that are euphemistically referred to sexy marketing as first-time homebuyer loans, they have their own trade-offs. And usually that trade-off is the interest rate, because nobody's going to give anybody anything for free in this life. So that program pays for itself by increasing the rate in many, many cases. So a 580 is normally far from the acceptable credit score for such a program that it normally requires a 640 to a 660 FICO to ensure that the lender isn't making a impractical decision there for lending to a person, right? So it's important to understand that. And I wanted to touch on that because I don't know about you, Brandon, but I hear too often people talk about that situation, and it's like they want everything, the sun, the moon, and the stars, but they haven't done anything, and unfortunately, to build up their credit or build up themselves. And it baffles me, because I was 33, I was 32, 33 when I bought my first house. Which so happens to be the average age of a first-time home buyer. Do I wish I could have bought one earlier? Yeah, sure. But I was active duty, right? Serving our country. Didn't have a chance to buy. By the time I came back from deployments, somehow the market in the leading up to the 2008 collapse, right? Deploying out at 2001. We all know what happened there. I was very much gone very quickly after that for a long time. But the point being, I came back to the United States and I was like, oh my God. Before I left, this was $220,000, even in San Diego, like way out of San Diego, mind you, like an hour out, but it was still like $220,000 for a new construction home. I thought, well, when I get back, I'm going to go get one of those houses. When I came back, there were $500,000. I was like, oh my God, what happened over here? I was like completely baffled, right? I was like, well, I guess I'm not buying a house. So it's just interesting though. But and then I went into bankruptcy like a lot of other people did when I PCS'd or EAS'd out of the Marine Corps essentially in 2008, 2009. Economy is in full hell in a handbasket mode. Got hit as hard as everybody else got hit. Didn't want to go to bankruptcy. Never thought I would have been in bankruptcy. Very humbling and humiliating experience for me. But at the same time, it happened. Then it took me obviously 2 to 3 years to recover, build up that credit score, save up a little bit of money, reassess the situation. And that's when I decided to move to Vegas because homes were affordable to what I could realistically afford. And it seemed like the cost of living was less. But nobody gave me anything for free. I had to work on it.
Yeah.
That's the moral of the story.
Takes work. I mean, it absolutely, it takes work. I mean, if having a house, buying or owning a house is a lot of responsibility, so it's just more than you making the payments. You're going to have the roof starts leaking. You got to get it repaired. If your laundry vent gets clogged like mine did like last weekend because my clothes aren't drying, I had to, pull the dryer out and, figure out how to get the lint out from the lint chute, from the air chute for the air dryer. So, I mean, also too, and if I was to have somebody come out, it would be a lot of money, or probably around, I think it was like $150 to have somebody come out and do it. But there's a lot of extra expenses that are involved when owning a home. You're not just paying the rent, but you're paying the mortgage payment plus whatever maintenance that needs to be done on the house. And it's good to have, like you're talking about, good, you need to have clarity on your finances and, make sure that if you have that clarity, when you have that clarity, then, and you have the right, and it's the right time for you to buy a home, then, and I forgot where I was going to that because but anyways, yeah, you have the clarity on your finances, then you'll be confident in making that move forward to buying a home, and hopefully you'll have that money, the money saved up to catch any or to have for any unexpected expenses. So
that's a great point. And just to touch on it for everyone on what Brandon's saying, as a homeowner, of course, you're paying your mortgage, right? Which consists of your principal, your interest, your property tax, your homeowner's insurance. And then you have to account if you live in an HOA for your monthly budgeting purposes, your HOA, right? It is important to understand that best practice, and I've made videos about this before, I've made videos about emergency funds, financial stuff like that to help people out. But when you're looking at home ownership, it is best practice, if possible, to save anywhere between 1% and 3% of your home's value every single year. So if you buy a $300,000 home, let's say, then that's $3,000 a year. Ideally, you're saving for like a home maintenance account, okay? Now, is that saying it's going to cost you $3,000 a year in home maintenance? No. But at some point, we know that depending on how old your home is, that roof may need to be replaced. That costs money. We know that, we might need to do some other work around the house. That costs money. So it's important to have that money in its own home maintenance account, if you will. As important it is to have like an emergency fund, ideally 3 to 6 months, if not longer, of reserve cash. Most Americans right now, I am really hurting right there along with them from the vantage point that a lot of Americans have less than like $2,000 is what it said in their savings account or checking account. And you can't make ends meet for very long if that's all that you have. But then we have to also go back to personal accountability and personal responsibility. And I hope that part of the opportunity that we have here through all of this, once we get through this, is that people will recognize some of the behaviors or habits that they had that were not productive and not serving them, and let those bad behaviors just essentially release the negativity and dispose of the habits that no longer serve them, so that they can embrace a positive and productive path forward so that they do save. So that if something like this happens, then they're not like, well, I'm going to have to dip into the emergency fund. Don't really want to do that, but I am super happy and grateful to have one because you spent years and you spent time accruing it. It doesn't happen overnight for most of us. I've had to work really hard over years since that bankruptcy to get as far from that position as possible in life. And I had to own my behavior, and I had to own myself, and I had to own what I did to get into that position and look at the person in the mirror and realize it was that person staring back at me's fault. At the end of the day, it doesn't matter what the world did, didn't matter circumstance, didn't matter situations. Ultimately, I had a choice. And ultimately, that choice is what situation did I put myself in or not. And once we have that kind of honesty with ourselves, we can truly then form a foundation that is solid to move forward. So I would like to just put that out there. I know we talk about real estate and that is the premise of everything. But for me, this is about life and making sense of life together to help everybody. Real estate is only one part of it. Isn't it, Brandon?
Yes. Yep. Yeah.
So living with D. With D, thank you, my friend. Living with D. Hi, I just put an offer on a short sale house. We were going to fix it up and live in it. Any tips? How long does it take? How long does this? Okay, I think the question realistically is how long does the process take since it's a bank and not a seller, like a traditional seller? So, Brandon, would you like to tackle the question?
I haven't dealt with any short sales in a long time, but from a couple years ago, I did have a client that was in a position unfortunately, to do a short sale. It took a while. It's up to the banks to decide on whether or not to accept that offer. And I don't know about you, Andrew. I don't know if you've recently worked with any short sales, but from the last time, it took about probably 30 to 40 days just to hear back on what they wanted, if what the offer is. And, they want, obviously it depends too on how soon the listing came on the market as well, because the bank wants to have maximum exposure so they can get the best offer in. So, I can't really say for now, but I don't know if you have had any experience, Andrew, on recent short sales.
Short sales in general, yes. And living with D, whenever I got into real estate, it was late 2013. In the late 2013 market, in the Las Vegas marketplace, we had probably, when you look at distressed sales being foreclosure, auction property, short sales, what have you, our market consists of about 55 to 60% of distressed property sales at the time that I got into real estate. So I was literally cutting my teeth as a newer agent learning this process. And the process hasn't changed a whole lot over the years. And the most recent one, I think, was maybe 6 or 12 months ago. And the reason being is it's an alarming number. Back in 2013, 55 to 60% of the market was still distressed property sales here in Vegas. But here's the thing. By 2020, where we are right now, distressed property sales account for about 1.5% on the highest of the high calculations of the total available properties available in Las Vegas. So it doesn't come up that often. But to your point, when you're looking at putting an offer in on a short sale, one of the things that I'd ask you to do with your buyer's agent is, number one, find out if there's what's called a short sale approval letter from the bank. In other words, if the property is listed at $300,000, has the bank already done what's called a BPO, a broker price opinion, and said, hey, we're agreeing to sell this property at $300,000? If so, you can move forward and close in as little as 30 to 35 days. Unless you're an attorney state, then you might be 45 to 60 days, just depends, right? Now, if they don't have that, then it can take, and it realistically does normally take, anywhere between 4 and 12 months to close on a short sale. Because to what Brandon was saying a moment ago, if you don't have that short sale approval letter from the bank, then what has to happen is they have to collect all this information, go through their bureaucratic process, which is very fun, a lot of documentation, and then come back and say, yeah, we accept it. But a month may have gone by, 2 months may have gone by, right? While you've been doing that, then they're going to allow you the opportunity to do your due diligence. They're going to process it. They're going to be working with the seller that they're actually doing the short sale process with. And then at that point, then it's going to depend on how soon they do the broker price opinion. Then it's going to depend until they get around to getting ready to close on the property. Now, this process, let's say that it was 6 months, okay, which pretty normal. Let's say it was 6 months. Let's say that the coronavirus is done and passed out at that time. And let's say the house is $300,000 as you made an offer on it today. Now, 6 months in the future, bank says, hey, we did a broker price opinion on the property and that should be selling for $335,000. They're about to give you a short sale approval letter for $335,000 and expect you to pay the $335,000. That's just the sheer reality of the situation there. And it's important to take stock of that, because if you just got to be ready for it, because I've seen it happen in practice where a bank came back at a higher amount of money than there was originally agreed upon. And the bank is going to give you essentially 48 hours to make that decision and say, hey, you're either buying this at this price or we're canceling. And now that we have a short sale approval letter, we're putting it back on the market for a buyer that can qualify and get approved for that. So that is the dirtiness, some of the dirtiness and hard learned lessons of my experience working with short sales. Seen some that were very easy because they already had the short sale approval letter. And I've seen some that the bank changes the rules on you, at least ways in with regards to the price. So I just want to prepare you for that, not scare you, but just to prepare you for the reality of that. Not saying that it's going to happen in your case. That's why I ask you to get with your trusted real estate advisor and find out first and foremost if there's an actual short sale approval letter from the bank on the table, and go from there. Okay. So thank you for the question. I think that's a really wonderful question. And please track back with us and let us know how that turns out for you.
Absolutely.
Jaw G. Let's get Jaw G. Thank you, Jaw G, for tuning in today. It's great to hear from you, my friend. Jaw G says, what is your opinion of wholesaling real estate? Does it bring any real utility to home sellers? Due to my uncertainty, I am considering wholesaling real estate instead of flipping South Texas. Brandon.
Wholesaling real estate. I'm not a real estate wholesaler, but this is my thoughts on it. If you find or you come across a good deal, I know that if you find a really good deal, there will be investors that are looking to buy it, especially now. So, due to my uncertainty, I'm considering wholesaling real estate instead of flipping. Right now I'm flipping a house. So I was able to help somebody out, and the house needed some work, and we are in a position where we could go and do the flip and everything, and hold on to it for a couple months if we needed to. And if you do come across so this is the other thing too. In fact, this is a conversation me and my wife had this morning. We do advertise or actively look for people that are looking to sell their home. They need a quick sale, because there's people out there, and there might be a situation where it wouldn't be we couldn't afford it, or it's a situation where it wouldn't be a good fit for us. So there might be an investor that we work with or know of that would work for them. So it's if you wholesaling, you don't really need a license to do a wholesale. You are going to be putting the house under contract in your name, and there is some risk to that as well. But I know I don't know what's your thoughts, Andrew, on it, because if I was in a position to wholesale a property, like if I had it, I would definitely turn it over to an investor and let them handle it if the situation fits them.
Fantastic. So thank you for sharing your insights, Brandon. So when it comes to wholesaling real estate, Jaw G, there's a lot of different considerations, as you know, my friend, especially. It sounds like you have experience in the field of flipping and wholesaling. Right now, I don't believe there's a whole lot of opportunity for wholesale, to be honest with you, depending on what margin you're looking at. I know that typically you guys try to operate off of like a minimum of a 730 ARV. Being the after renovation value, if not greater than that. And you don't want to make an offer greater than that 70% to account for the upgrade cost that might be needed. Hence, most people that sell to a wholesaler would be looking to relieve themselves, essentially, to put it politely, of a property in disrepair, right? So when you look at your margin and you look at the market, and you look at where we are with lack of inventory, that's why I say, look, am I going to tell you that there's no wholesale opportunity? No, but I will tell you that it's scant. And it sounds like you're doing your homework and your research where you can find these opportunities, like you said, in South Texas in specific. People think of Las Vegas sometimes as the 2008, 2010 Las Vegas market, whereas the Las Vegas market is by and large very unfriendly to wholesalers because you can't get the value that you need because the banks know, or the people that hold it know, they can release these properties. And to the reason it doesn't always make sense to the wholesalers, even if they let the property go for essentially pennies on the dollar, in some cases, highly distressed properties, you may see that, then the cost of the renovation may exceed $100,000 depending on what was wrong with that property, because they're fairly destitute, frankly, looking properties, and they're awful in that regard. So they need a lot of love. They need a lot of attention. That's where, to your second point, it can make a little bit of sense if you watch your numbers and you have experience flipping and you put together your flipping team with your contractors, your agent, all the different people that you work with to make things happen, your electricians, your plumbers, your whole retinue of your team, Jaji. Then getting it something pennies on the dollar, being able to smartly upgrade that property and flip it out after making sure you address the health and safety concerns of said property, so that you can have it appeal to as many would-be home buyers in the market as possible through every loan type. Then you may have an opportunity. But I would suggest to get very clear on your numbers, get very clear on your realistic expectations of not only what you can pick up a property for, but how much is it realistically going to cost to reno it? And how much do you realistically think that you'll be able to profit at the end of the day? There's a lot of considerations. Now, Jaji, wholesaling real estate, very fun in different regards, because I don't know if you heard, but recently your big iBuyers, right? Direct competition, the wholesalers essentially trying to come in, and cash investors coming in. Open Door, OfferPad. Look, they just announced they laid off 35% of their staff. Very interesting. I've always thought their business model was unsustainable because it was highly dependent upon the stock market and how many people were infusing cash into them to be sustainable. And in Vegas, we're one of the markets they operate in. So I've been watching this business model for quite a bit. I've been watching their song and dance and the deceit that they put out on their website in terms of what it truly costs to sell a home. And I also made a video late last year where Collateral Analytics had actually taken a look at about 5,000 property sales across the United States of sellers that sold to them, and realized that it cost them an average 12 to 15% of the property value. So it's a lot of money. 12 to 15% is where, working with a traditional agent, you might be somewhere between 6 and 9%, depending on negotiations with like buyer closing costs and such. But that being said, Jaji, as a wholesaler, there's opportunity there. Just gain clarity. The moral of the story here is always have clarity about what you're doing, have reasonable expectations, and have your business plan ready to go, and have everything identified as far as your team is concerned if you're going to go into flipping homes mode, right? Because real estate's a little bit more expensive. So let us know how that turns out. And I think it'd be really good to hear from you as somebody that's actively pursuing wholesaling, because you're saying wholesaling real estate instead of flipping. Look, flipping margins are way down. We've been watching those margins go down for the last 4 years as real estate becomes more expensive. So it's a really tough racket right now to do that. And that's why the people that are out there saying, oh, this is going to collapse the market and everything's going to happen and we're going to have 2008 all over again. No, and hell no. And one of the things, and I said it, I've said it every live stream, so I'm going to just say it again, and I'm just going to keep at it until I honestly, if I think there's going to be a difference, then you'll be the first to know, because I go live 3 times a week, and that's what I would tell you. That's my promise. So number one, is COVID-19 strong enough to take out the real estate market? No. Is the stock market strong enough to take out the real estate market? No. What is strong enough to take out the stock market? Unemployment. Now, with unemployment, if everybody went unemployed, or a significant portion of the population, let's say 15 to 25%, as a factor of overall Americans went unemployed, we got a big problem. And real estate is the least of anyone's concern, because now you're not just talking about the real estate sector. When the United States economy is comprised of over 20 major sectors, real estate is but one. So when we look at that, we now have a problem across all sectors. Then we have a disaster. So to anybody that's watching this and they're like, hey, yeah, but Andrew, unemployment is like super high right now. There's like 22 million people or 26 million people that are claiming unemployment right now. Great point. And back to a conversation that I had with some amazing clients yesterday, I would ask you to do this thing again called #JTAP. Just take a breath and let's reassess the situation logically. And the question that comes to my mind in this unemployment, it's tragic, and I'm glad that unemployment insurance assists people and helping them bridge the gap for the time being. But how many of those people that are claiming employment are furloughed? How many? Is, and I always looked at gain in. Somebody else can let me know what people are thinking here. But my guess is probably as much as 85 to 90%, if not greater, are furloughed. And by the definition of being furloughed, what does that mean? When the work restrictions relax and people are able to go back to work, wouldn't they be going back to work? By the definition of furlough. Yes. So as fast as we see all these claims shooting up, you could equally see the unemployment rate drop just as dramatically once people start going back to work.
Right.
And I believe that's a very real thing to put into the mix when you look at variables and equations and how to sort them out logically. You got to look at everything. You can't just look at a quick algorithm hit or a quick equation. You got to balance the equation with realism. And you got to ask yourself the question, how many of these are due to coronavirus? How many of these are due to furlough? How many of these are due to layoffs? Layoffs essentially being people got fired. And that's what we saw in 2008 is a whole bunch of people getting fired, right? Not furloughed. What we're seeing in the 2020 market is a whole lot of people getting furloughed, right? So they'll be back to work when their work restrictions are relaxed. And I think this is very important to keep track of. And it's something that, obviously going live 3 times a week, we will be keeping track of and watching and seeing how this plays out, right? So right now, I know it's alarming when you hear some of these numbers, but please understand that fear sells, and it shouldn't, but it does, right? False evidence appearing real. It sells. So when you hear percentages, as in the Wednesday's live stream, and I popped it up on the screen with mortgage forbearances were up 1,847% in a week. And the next week, it was up 1,900%. But then you account for the total amount of overall mortgages in the United States, the litmus test here, it accounted for 2.6%. 2.6%. That's not going to tank the real estate or mortgage industry by any means. Okay. Now, as we know with Bill Marion, that'll be back on with us on Monday and Wednesday with updates. This is something that we're watching closely to know, number one, how do these repayment terms, what are they going to look like? When are we going to know these darn rules so we can actually have a productive conversation about this, right? But we also know that right from him as a sales manager for New American Funding and a senior loan officer that has literally helped thousands of families over the past 14 years close on their home loans, right? We know that it is best if you're in a position to pay your mortgage, to pay your mortgage. And to somebody else that I was having this conversation with, I had a lot of conversations yesterday, come to think about it, Brandon. They're like, well, why not claim mortgage forbearance? If everybody else is doing it, why not? I said, look, at the end of the day, the piper's going to get paid. Trust me. Yeah. Everybody else is looking at, how can I get out of having to pay my taxes for 2019? Heck, Uncle Sam stuck it to me and I already had to pay it. Right? I didn't look for the way out because Uncle Sam's coming to get his at the end of the day, whether I like it or not. So I might as well give it because I don't want him to take me because the government don't play.
Where's my money?
They even beat me up.
Where's my money?
Right? Where's my money?
Where's my money?
Even in the first quarter taxation for me as a real estate agent, right? Here's Uncle Sam sending me all these emails. Hey, your first quarter tax payments are due. You need to send us money. You need to send us money. I got these messages. I was like 5 days in a row. I was like, oh my God. All right, get off my back. Quit sweating me. Man, everybody else is trying to mitigate taxes and being told small business loans and everything else, but you're coming after me. Man, I'm not a multimillionaire. My God, why don't you go after those people? But long story short, yesterday I had to pay my first quarter taxes, right? Because at the end of the day, the piper will be paid. Yep. And so it's true of the mortgage forbearance. The piper will be paid. So if you don't need mortgage forbearance, don't use it. If you truly need it, use it. That's what it's there for. It's not there to game. It's not there to play. It's there as a net of security for those that truly need it. And then let's work into the process and let's see what those repayment terms are going to look like. My guess is any notion of an immediate repayment within like a balloon payment at 3 months is going to have to go gone. I don't see the House. I don't see the Senate passing that by any stretch of the imagination. That's absolutely foolish because somebody, if they can't pay and they're not working right now, that's not going to help. And even if it did go into a foreclosure proceeding at that point, guess what happens? There's this process in foreclosures called mediation that could draw out that process for a very long time, and they may not end up being foreclosed upon at the end of the day. These are realities. There's a lot of moving parts here, people. And that's why we're doing these live sessions is to get to the facts and no fear, no false information, all real information, all real conversation, and having the conversation. So it's a discussion. You don't have to agree. You don't have to disagree with me. But by virtue of having a discussion, we're moving the process forward. And hopefully you guys are going out and talking with your family and your friends about everything and letting them know what's happening too, so we can get the dialogue moving forward so that we can come together, because we're stronger and better together than we are not. And we can make a productive change as we the people, right? So Jake, there you are, Jake. Thank you. Thank you for being here, Jake. Jake says, hello, Andrew. My wife and I are in the market for our first home, or for the first time, and your videos are amazing. Very informative. Thank you for your time. Jake, thank you for that. It really means a lot to me hearing from members of our community. Again, if you got some ideas of what to name our community, please let me know. But I've got to name our tribe. We got the vibe. We just need the tribe name now, right? But Jake, I really appreciate that. That's super motivating, super encouraging to me. Thank you, my friend. Drew's Enthused says, I hope my fear about a leaking pool is false.
Oh no.
Fear is false evidence appearing real. Okay. If a pool is leaking, Drews, that's not false evidence. That's real evidence. There's a difference in between fear being false evidence appearing real and an actual real thing. Now, I'll send you positive mojo, and I love that emoji. I love these emojis when I see them. They're like, I don't know. And the one that smacks your stuff on the face, I think they're hysterical. They're like two of my favorite emojis when I see them. I'm like, oh my God, I can't help but smile and laugh. So thank you for that, Drew. That's like, it's just one of those emojis that me like, oh crap. So I'm sending you positive mojo on a serious note that you don't have a leaking pool. Okay. But let us know how that turns out for you, right? And for reference, in my experience as a pool owner, if that plaster or the surface of the pool, depending on the size, needs to be popped out with a jackhammer and actually replastered, essentially, that process, depending on the size of the pool, could be anywhere between $12,000 and $20-something thousand. So depending on the type of liner you're putting on the pool, and also the type of bottom, like are you going to do Pebble Tech, or are you just doing plaster? So it really depends on a whole lot of choices. So definitely I'm going to send you positive mojo that hopefully your pool isn't leaking. Bill, thank you for hopping on, my friend. It's great. Bill says, what's up, Andrew? Jade Tab, good stuff, brother. Just take a breath. Yep, Bill. Awesome, awesome, awesome. Thank you for being here. Drews and Thews said, are either of you bummed about Burning Man being canceled? You know, I haven't had a chance to go to Burning Man, and I am pretty bummed because I've heard that it is a great thing to go to. What about you, Brandon?
Bummed about Burning Man being canceled. I don't even know what Burning Man is. I'm sorry. What is it?
We'll move on. We'll move on. Google it after the live stream. It's something that it's one of those things in life that I got on a bucket list to go to a Burning Man and check it out, because I'm like, man, I got to go hit that up sometime and check that out. Let me see. Oh, Bill, you know what? Well, before I jump back to Bill, I saw Drew jump on with something, so I thought it was pretty funny. So when we're talking about his leaking pool, right? That's why I wanted to jump on this real quick. He said, ha ha, I'm in Phoenix, so there is evaporation. Ha ha, I'm in Las Vegas, so my water also evaporates. Yes, there's not a leak in my pool, but goodness gracious, does that
well, let's hope it's evaporation, right?
It's a serious thing. In Phoenix, I imagine in Phoenix, it's about as serious as it is here in Vegas, because in the summer, I can lose like 2 inches a day off the surface of my pool, and just sheer evaporation. I mean, it's no joke. That it drinks. It's a thirsty desert. But Bill, I saw you, my friend. I don't know if you're still with us, but if you are, awesome. But I do love this comment that Bill just made. So Bill said in 2008, because Bill was very much a loan officer back in the day, and Bill said 2008 was totally different! Exclamation point. Well, thanks for the enthusiasm. Just yell at us, Bill. Darn. He said ninja negative amortization loans and stated income, stated asset loans were a huge contributor to the crash. No kidding. No kidding. Absolutely. And then what was that other comment, Bill? Help me with it. I wish you were live with us to help me with this. It was CD. I believe it was CDO, collateral debt obligation. the way that they started collateralizing the debts and combining them and selling them off as essentially a form of a mortgage-backed security on an REIT, which is real estate investment trust, and the way that they were doing those swaps on the market, and the way that they started tricking out the ratings from A, they would start put bad notes in with good notes, and that was a big part of the problem in the stock market side of things. So if anyone has heard of or hasn't seen yet The Big Short, watch that. That was actually a very, very accurate movie about what was going on. The Big Short. Check it out. Let me know what you think. It was a very educational, like docuseries style show. I really, really enjoyed it. Jaw G, thanks, Bill, by the way. Jaw G says Governor Abbott will announce today his plan to reopen the state of Texas. Are you excited about that, Brandon? You were in the state of Texas,
yes.
so.
Yes, but you know, in a way, it's kind of been. It felt kind of like business as usual for me. I know for other people it hasn't. But you know, I'm excited. My kids are excited to go back to work. You know, they work, and we had them stay home just to kind of see how everything plays out. But we don't want them getting sick. But you know, I think that now that we kind of understand how this virus reacts, and there's ways to protect yourself, and we're like chameleons. You know, we adapt, we overcome, and we carry on and do life, do it with love, and bring joy to other people. So
absolutely, and I definitely am resonating with everything you just said right there. So that's awesome. So it's all about bringing love, joy, and hope to every interaction we have, big and small, direct and indirect. If more of us approach each other out of common respect and decency, the more that we can overcome and assist each other. So I have so many thoughts, but I know this isn't supposed to be a motivation live stream. So I'm going to go on to the next question.
Well, you're inspired, man. That's great. That's great. You know,
people inspire me. My community inspires me. You inspire me. Everybody inspires me because everybody has a life, and everybody's life has a story. And to me, that's powerful. And it's just about listening carefully. And I love live streams because it's an opportunity to connect with my community and maybe people that haven't been exposed to my community. And I just love connecting on a deeper level with my community. It's my favorite thing to do. I wish I could have all 18,500 live on right now and answer as many questions as possible. It would be beautiful. So Sevia says, when do lenders consider a buyer's age and decreased income due to possible retirement when looking at loan approval? Not age discrimination, but the concern about loss or decrease of income. Sevia, that's a really interesting question. And my friend, I am certainly not qualified to answer that one. As much as I've learned, I would not know how to answer that question without Bill taking that on. Sevia, I know that you've been on previous live streams. Please join us back Monday morning at 9 a.m. Pacific when Bill will be back on. And please reissue the question or simply leave it in the comments of this video. And I'll let Bill know if he's not on with us right now to please hop on your question and answer that question because to my knowledge, they don't consider your age whatsoever. All they consider is, because we can't legally do that underneath like RESPA and Fair Housing Act and lending practices, we can't discriminate as real estate and lending practitioners based on anyone's gender, sex, origin, national origin, their age. There's so many things that we can't do. And when you say buyer's age is specific, it's not. I understand the question, but technically that's not why you would be disqualified or qualified for a home loan. It would all be about, can you qualify for the loan based upon your present income? It's all about income, assets, credit, and employment. That's the only way I know to answer your question. And truth is
how stable your income is, especially with retirement.
Correct. Is it coming from 401k? Is it just going to be Social Security? You know, what is it? What is the situation? All forms of your income coming in is the only way that a lender, to my knowledge, is going to either approve or disapprove you. But I think that's a really interesting question, the way that was phrased. And I'd like you to ask it again so that we can get it directly from Bill Marin's experience and hear it right from a rock star loan officer. So Bill, I see that you had made a comment about lock. You must be referring back to, let me see if I can find it because he said lock. Oh, okay. So Morris D, if you're here with us, you were saying about 3.25 rate at 0.183% discount point. Should I lock it today? This is for 20 down. Bill later on right here said lock it. So if he's suggesting you to lock it, then my friend, what I can tell you is when Bill makes that comment, lock it, because that means he's seeing something coming in the market that rate may just jump up. Because if he didn't think that, he would tell you float or wait. So, I mean, I'll watch him do this in real estate practice with the clients that we represent together. If he says lock. If he says wait. And that's what I've learned with Bill and working with him to help over 170 families over the last 6.5 years of real estate practice. So I trust that coming from Bill. Sevia, thank you so much for the additional information. Sevia says, I am self-employed and my husband is 2 years away from retiring, not looking to own it again anytime soon, but wanted to know in case rent becomes insanely high. Great points. And if you're self-employed, then you're going to go off your last 2 years tax returns as a self-employment type loan, right? Your last 2 years tax returns will qualify as, let's say that you earned $200,000 1 year, because you said you're self-employed, right? So I'm hoping, I'm going to put positive mojo out there. You're doing quite well for yourself. But let's say 1 year you earn 200,000. Let's say the next year you earn 300,000. So the way that those work is that the lenders say, okay, that's 500,000 divided by 2 is 250,000 annual income in such a case, right? Now, keep in mind, I'm not a loan officer, but as a real estate practitioner, I'm considered self-employed as well. So I know that whenever Bill helped me with my mortgage in 2016, when I bought my new home, they take the last 2 years tax returns. Technically, they could take 1 year's tax returns, but then let's say it was 200,000. Again, they still got to divide by 2 to meet the lending requirements of having 2 years returns, essentially in this case. And then now you, instead of getting qualified for the $200,000 amount, you the $100,000 amount is the way that works. So I think that's really interesting. And with your husband retiring, is he going to receive a 401k? Is he on a pension? Is it going to be Social Security? So many questions come to mind that really got to be filtered through the income, asset, credit, and employment situation. His case, retirement situation. What are the sources of his income? Sevia, I want to get you the best answer, my friend. Please come back this Monday at 9 a.m. Pacific time when Bill's with me so that we can address those concerns, or please just post them down in the comments below so Bill can hop up on it, okay? Thank you so much, Sevia, by the way. Huevos Rancheros. You know, I actually like Huevos Rancheros. That's making me hungry now. Time for brunch or something. Anyway, what's the average cost as a buyer for going out and buying a home as far as having people come out and doing appraisals? So I see essentially 3 different questions there. What about you, Brandon?
I was reading it too. What's the average cost as a buyer for going out and buying a home as far as having people come out? I don't understand the question. What's the average cost as a buyer for going out and buying a home? Okay.
I'll take it. So Brandon, what I see in 3 questions is, number 1, what is the average cost of a buyer to buy a home, right? And the reason that becomes a 2-part question is because you have down payment, you got buyer closing costs. That's 2. The third thing that I see is the cost of an appraisal. That's 3. And Huevos Rancheros, I would suggest jumping on my channel, Googling buyer closing cost. Watch that video where I tricked out, believe it was like 20 something minutes or something, or close around that, where I went down line by line the cost of buying a home. But in short, let me just share this with you. It depends on your loan program. Let's say that you're using an FHA loan program, very popular loan program. So let's say that you're using a traditional FHA loan product at 3.5% down. Let's say that you're in a non-attorney state and like Texas, for instance, right? So, and you're going to buy a home over there, and traditional closing cost or normal closing costs range between 2 and 4% nationally. Best to estimate 3% in a non-attorney state. That would mean that you need 6.5% of the purchase price of a home. So let's quantify that out, right? So 6.5% of the purchase price for, let's say, easy math, of a $300,000 home is, let's see, that's $19,500, I believe, off the top of my head, right? So you would need to have, in my humble opinion, you should have at least $19,500 to be prepared for the down payment and buyer closing cost. And understanding that part of a buyer closing cost, when you look at the breakdown of buyer closing costs, that's already including the amount for the appraisal. It's already including the amount for the home inspection. So it's also including a big lion's share, because sometimes I get it, and I'm sure that you get this a lot. That's why I made that video. They're like, hey, why buy a closing cost like 3% of a price? Where's all my money going? Who's getting all that money, right? You, the buyer, are actually getting two of that 3%.
Prorated taxes, prorated property taxes, insurance, property
It's exactly what
insurance.
it comes down to. It's an impound account. It's 2% of the 3% of realistically go in the form of an impound account. And that's why I always tell people, hey, you don't owe a mortgage for like 45 to 60 days after you close, depending on what day of the month that you close in and depending on how your loan is structured, right? Why is that? Because you've impounded 2% in prepaids, including 2 months of your mortgage and your buyer closing costs in many cases. So when you look at it, it's an easy way to understand what's happening there. And just to answer the point directly, average cost of appraisal generally ranges between $450 and $600, depending if it's ordered on rush or not. Average cost of a home inspection varies location to location, though it will be dependent upon a host of different variables, not the least of which is the size of the home. Here in Vegas, a home that's 2,000 square foot generally costs about $295 to $325 to get inspected, depending on the type of home inspection being performed and the inspector rendering said services. So that's something that I would ask you to get with your trusted real estate advisor, ask them if they have any recommendations, and also do your own investigative research into ensuring that you're happy with the home inspector that is coming out. Now, and I believe it's episode number 7 of the Hernandez family's buyer reality show that's coming out. So in other words, 6 weeks in the future now, we actually had a home inspector out there and we videoed the process. So if you want to see what it actually looks like and trying to condense it down into a 30-minute track whenever the home inspection is actually like 3 hours, well, it'll give you a very good insight into it from there. But
Hey,
honestly,
also, I wanted to add too about huevos rancheros. I wanted to answer, you know, if he did talk with a real estate agent that knows his area, they could absolutely find out, you know, if you were to give them an estimated price range of where you're looking at, and then in the area, so they can kind of know what property taxes are, if they, you know, if you guys have property taxes and wherever you live at, and then they can give you a breakdown of what, you know, an estimate of a ballpark figure of what it would cost to buy a home. So
great point. Thank you for raising that, and solid advice, Brandon. Thank you. Lynn Brown. Thank you, Lynn. I see you. Lynn says, hi, Andrew. Would you be having a realtor from New York anytime soon? Yeah, that's actually on my list. And if you have any realtors in mind, that'd be great. You know, I would love, I know that I'm a small potato compared to the guy that I'm about to mention, like really small potato. I would love to have Ryan Serhant. I absolutely adore Ryan Serhant. He's comical to me and he's extremely smart. But I would love to have Ryan on. I've tried to reach out to Ryan a few times, but he's busy. So I'll try again. He only runs like one of the leading brokerages in the world, right? But that being said, you want to talk about insight into the New York market, that guy's going to have it. But to your point, yes. So what I'm doing, Lynn, I don't know how many people I'm going to have lined up next week or not, but next week it just might be me and Bill and then me just doing an AMA session on Friday. What I'm doing is I'm re-looking at all the different agents across all 50 states, and I'm essentially trying to hit a target of one day is like West Coast, one day is like the Midwest, and then another day is like the East. So, and keep working in that format until we hit all 50 states, and then rinse and repeat and circle back with different agents in each of those states, maybe in a different major city in the area. But to your point, Lynn, yes, I am very much cognizant of trying to get all kinds of different people on. I want all races on this channel. I want all cultures on this channel. I want to hear from everybody's point of view, from their walks of life and everything. So I want all kinds of different people with good experience that actually have. That's my litmus test. Number one is got to have the experience. That way, what you say is true and what you say is knowledgeable, and that it provides value to everybody that's watching, either during the live stream or afterwards. That's my big qualifier. So, got to have experience. But that said, Lynn, yes, stay tuned. And yes, there will be a realtor from New York anytime soon. Sometime, depends. Soon to Andrew, just so that we're clear, soon to Andrew could be, well, a month. It could be 3 months. But New York is on my hot list for sure. I wanted to hit Florida. So whether I get the agent on from Florida or New York first, it doesn't bother me. But both of those on the East Coast are my 2 big targets right now that I want to get somebody on, because we've kind of hit the middle of the Eastern seaboard. Now I'd like to get someone on either the extreme, well, New York's not quite extreme up there, but north part of the seaboard or the south side of the seaboard. So stay tuned. But yes, they're coming. Martinelli, thank you, thank you, thank you, thank you. I say that because Kathy is like Pug Love in April. She's one of the awesome members of our community. And Kathy, if you're still on right now, here we go. We need to name our tribe. We got the vibe, but we need to name the tribe, Kathy. So if you have an idea of what we should name our community, then please let me know. I'm definitely one of the other things on my mind. So Kathy, thank you for being here. She's always so sweet. She's been giving me a lot of positive mojo, and I just love her positive energy. So Kathy, thank you for that. Queenie X says, is it a good time to buy a home or to flip?
To buy a home,
Brandon,
to flip. Well, I think it kind of goes back to the wholesaling question. It just depends, have clarity on where, what your income is and where you're at right now. And if it makes sense, if the numbers make sense to you to buy a home and to flip it, you can take on that risk, then go ahead. Cause when I bought my property a couple months ago, we didn't have the pandemic, we didn't have that, but at the same time, we are prepared to carry that property if the contract doesn't go through, because we're under contract right now. We're supposed to close at the end of this month, but we are prepared to take it, but it just depends on your situation, your financial situation, and the risk. What risk you're willing to, what risk you can handle. So.
It's a good point. It's a good point. So, Queenie, ultimately, you got to look at your numbers and look at what the house is going to cost you, look at the amount that it's going to cost to flip, and look at the, in addition to what you can potentially get for the sale of said property, also calculate your holding cost of the property as a flipper, especially, and be realistic to market dynamics that I don't know about your local marketplace, but here in Vegas, before all the coronavirus stuff hit, our average days on market were already up to exceeding 88. Closer to 90 days on market as a norm. So that was indicating a very stabilized market. Even though the inventory of homes was so low, it was still sitting a bit longer than it was because the price is still high, even though we saw prices balance off of their high in July of 2018 into 2019, where the market started stabilizing in the market here in the Vegas marketplace. So the best way to know is to ask yourself why you're flipping, and the best way to know is to take a good, hard, analytical look at the numbers. If it makes sense, it makes sense. If it doesn't, it doesn't. Brown Gal 00. Brown Gal, did I say that one right? Yeah. Brown Gal 00 says, if we want to put more money towards the mortgage than the monthly payment, will the extra money added go towards just the principal? I see 3 different comments from you, so bear with me here. Let's go with that. That's a great question. So hang on to that one. I heard your mortgage biweekly saves money. How does biweekly mortgage payments work? Good question. And are there other ways to help pay off your mortgage quicker and pay more towards the principal instead of interest?
For me, Brandon, with my mortgage payment, we do pay extra, and we make sure that it goes towards the principal. I know most.
How do you do that? How do you do that?
Actually, with our loan, it's automatic. So whatever extra we put on top of our principal, it goes, or excuse me, any extra we pay on top of our payment goes straight to the principal automatically. That's how our mortgage servicer works. But I would definitely call your mortgage servicer and ask them what options you have as far as what options you have to, if you're making extra, or you're putting extra money towards your payment, where's that money going to go to? And if there's options, sometimes I know if you're paying online, there's like a little checkbox that says, hey, we want this to go to principal, whatever extra it is. So there's, I know they have that. I know that that's an option as well. Just depends on who your mortgage servicer is. But yeah, paying off the biweekly thing, paying your payment biweekly definitely saves a lot on the amount that you pay total for the life of the loan. So, and you get it paid off faster.
So great points, Brandon. Thank you for that. So Brown Gal, in short, let's take each one of your questions and pick them apart a little bit. Okay. So you say number one, if you put more money towards the mortgage than the monthly payment, will the extra money be added, go towards the principal? You have to indicate that. A lot of mortgage service providers, there's two things that you need to know. Okay. One is the type of loan that you have. Do you have an early payment penalty on the property? In many cases, that's not the case, but it is a fine detail that you need to be aware of. If you are paying it off early, are you going to hit an early prepayment penalty? Okay. Most mortgages, again, aren't that way, but verify it. You have the documents, and you can always call your lender, mortgage service provider to verify that. That's number one. Number two, when you're looking at how do you apply money to the principal if making an additional payment, it's extremely simple in reality. Your mortgage service provider, if you click that option and go ahead and go on there right now, right after this live stream, and go ahead and go into where you pay your mortgage, go onto that account, because I've seen it across the board. There's always an option for this. And if there's not, that's where you pick up the phone and call. But the option that I've seen across the board is you say that you want to make $1,000 extra payment onto just the principal. You're going to have an option that inside the mortgage service provider's website that says, hey, is this an extra payment, or is this going towards the interest, or is this going towards the principal? Never pay towards the interest, but always pay towards the principal. That's what the interest gets calculated off of, right? So great point that you're asking about principal. So thank you. But that said, check that box for principal. Then it's going to pop up another screen. You want to make an additional payment of $1,000 to the principal. Please click to confirm, and it shows you on the screen how that works, right? And do that, because I make extra payments on my mortgage every month. So when I do that, I always go on my mortgage service provider site, which so happens to be New American Funding, since they service their own loans. But that being said, I go into my mortgage service provider at New American Funding, and I go in there and I want to make an additional $200 on the 15th of this month. Okay, so I go ahead and get that set. I have it applied directly towards the principal. Boom, done. It's not complicated. It's not complicated. If they're making it complicated for you, you need to pick up the phone and call them, because it should not be a complicated process whatsoever to make your additional payments to your principal. So check your mortgage site, because in reality, it's very simple to make an extra payment directly to the principal, and you'll know you're doing it because you check the box. So about biweekly mortgage payments, that depends whether your mortgage service provider will actually allow that. Some will, some won't. But the best way to do a biweekly type arrangement, if you were trying to set one up, is to get ahead on your mortgage 1 to 2 months. Like, in other words, you've prepaid 1 to 2 months of your mortgage, and you give your mortgage service provider, now that is a phone call, and ask them if you're able to do that. Now, that being said, they're going to ask you, well, maybe, yes, no, and maybe, but we want to know why you would like to go into biweekly payments, right? So let's say you get paid on the 1st and the 15th, and you need to split your mortgage into 2 payments to make it easier for you based upon your pay schedule. That would be such a reason that a mortgage service provider could approve you. But you need to have that conversation with them. Now, more to the point of your question, though, is how does it save you money? It saves you money because of the way the interest accrues over time and making payments here and there. I know it's really, really interesting stuff when you start playing with numbers. But when you start playing with numbers and you look at how you keep offsetting this little calculation on interest, that's how you end up saving. You save it on the interest because you're hitting that clock back to back every 2 weeks. Boom, boom, boom.
Yeah, interest is calculated daily. So on a loan, and so when you reduce that principal, you're reducing the amount of interest that's being charged.
Mm-hmm. And I made a video a little bit deeper, and I don't know if you watched that one, but yeah, I did make a video about how that works out in more detail. If you want to take a closer look at that, as short of really getting crazy on numbers right now. No. Kathy says, hi.
Hi, Kathy.
So, hi, Kathy. Thank you again for being here, my friend. Really appreciate you. MBZ says, what do you think about taking a homeowner course? I think it's a great idea.
Yeah.
I've made about 50 or so videos about homeownership, and I suggest starting there because that's quite a course itself.
And it's free.
It goes over, and it's for now.
Well, the only thing it costs is your time, right? So.
For now, yeah.
For now.
For what's out there, for now, those courses that are out on homeownership will remain free, and there are over 50 of them. But that said, yeah, they're free for you right now. So go over there and start there, because I go over every season and in the maintenance list and everything else that you need to be aware of. Okay. So Pug Love in April says, I'd love to see you get someone on from an attorney state. It's my understanding Wyoming, where I hope to buy is an attorney state. Point taken. Paper. Let me see if I get it in the screen. Paper. Wyoming. They just rose up to the top of my list in addition to New York. Okay. So yes, I will work on getting somebody on within the next 1 to 2 weeks, ideally from Wyoming. Okay. Thank you, Pug 11 April. Kathy Martinelli is saying that she'll think about a name. Thanks, Andrew, regarding the what we should name our tribes. Since we got the vibe, let's name the tribe. So thank you for that, Kathy. Appreciate your support. Huevos Rancheros says, Mr. Finney, do you project Nevada becoming a mini California as far as the housing prices? Interesting question. Interesting question. Do I think it could become a mini California? Yes, I actually do. And to this extent, do I know when and if, or how it's going to happen? Of course not. But what I have watched is so many different people coming into the state, so many people that we have coming from out of state moving to Vegas, and so few people that are here moving out. I'm watching all the vacant parcels that when I moved to Vegas in 2012, there was all kinds of different dirt in between all these different residences. And now it's been filled up with commercial space, industrial space, office space, homes. I'm watching a city fill up all of its vacant dirt from the interior of the city and now starting to branch out. So yes, I do potentially see that coming. I don't know what I would be remiss, even as much as I know of my local market, to tell you how fast that is coming. But if everything continues at its present pace, then maybe in as little as 7 to 10 years, you could see the average price of a home in Vegas. It wouldn't surprise me if it was $500,000 at that time in 5 to 7 years. Average price of a home in Vegas right now is about $275,000. So, but it wouldn't surprise me if in 7 to 10 years, if everything holds its path of growth, then we would see it. So it's coming, but I don't know when. So, but that is a really good question, by the way. So if you're in Vegas, now is the time to buy. If you have job security and everything makes sense, of course. Laura Acosta says, there you are, Laura. Thank you for joining us. I recognize your face, Laura. You've been on before. I think you were on last week, and I recognize your name now. Yes, thank you for being here again. So Laura says, might virtual staging suffice with the expectation of a home being empty during showing so contamination possibilities decrease? Possibly. Every buyer is different. In my experience, whether it's virtual staging or staging in general, and Brandon, please feel free to jump on it as well, is it's 5 of what I like to say, 5 of one, 5 of another. To 50% of buyers are going to like to see the house staged virtually or physically. 50% of buyers prefer to see it empty. So it's just an observation that I made that it is what it is. What the big thing is can they conceptualize the space in terms of the condition of the house, in terms of the actual size of the bedrooms, in terms of the actual flow of the property. And that's why I believe video is so powerful. If done correctly, you can video a house and explain what room you're in and give the different angles throughout the house. And you can also zoom in on different cosmetics or different issues that may be of concern if you're doing that one-on-one video tour with an agent. But if it's like a promotional video, high quality, good flow of the video, going room to room to room, will definitely help. Thoughts, Brandon?
Yep. Yeah, I mean, virtual staging is great for the pictures on the internet, so people can get an idea of what the space looks like with furniture and how it looks being lived in. But even to have, I mean, I don't know I would think having people come in to stage the home, there would be a higher risk, of contamination. So if that's something that you're concerned about, definitely not do that. But if you do want to stage it, definitely, I always recommend to my clients to have their house staged. It just gets buyers more excited about the place, especially if it's professionally staged, if that, the owners has the HD TV type, knows the staging and stuff like that, knows how to stage, then absolutely, I think it makes sense to do that. It definitely puts, a home that is nicely staged just kind of brings it makes it feel different as opposed to being just empty.
So thank you for sharing that with us, Brandon. So Laura, at the end of the day, it would definitely obviously alleviate contamination possibilities if there was less people, foot traffic inside the home, if the property was empty, as you mentioned during the showings. So it is a suggestion that you take in consideration with the seller, or if you in fact are the seller of the property with your listing agent, then putting together the virtual tour. Why not do a few photos, virtual staging, if you don't have anything, since you mentioned it was empty, and then have your agent go back out and film a video of like a video walk tour and put it out as well. Why not go full kit and caboodle out there? And if somebody decides to buy a house technically sight unseen in such a case, then they're going to be okay with it. But if the house is also empty, then you're already risking less contamination if you're concerned about COVID by virtue of it being empty, and is less likely to have a whole bunch of problems like that, because we are hopefully all of us are following smart social distance etiquette and maintaining 6 feet away from people, whether viewing a home or not. So I like the question. I think it's a great question. I think it's one that is an awesome question. And I think it's one that you hit all nails on the head to work the situation smartly. So again, professional listing pictures, professional virtual tour, which are made of your listing pictures, by the way, then a video, and then maybe a few pictures of virtual staging, and then annotate on the picture that those were virtually staged, so people don't actually expect that when they walk into the home. Brown Gal 00, thank you so much, says, okay, thank you for explaining that. I'll take a look at the video. I missed that one. Not a problem, Brown Gal. Thanks so much. And if you still have additional questions, just let me know. And Pug 11 April says, thank you. So awesome. I think we're coming up on a wrap. Yeah, I wrote it down, and I also wrote down Lynn, by the way, Pug 11 April, when she was asking about New York in specific. So New York was obviously on my hot list of agents to find, but now Wyoming just came up there too. So anyways, everybody, hey, I really appreciate you joining in with us today. And I'd like to leave you, especially going into the weekend, of course, with Positive Mojo. And Brandon, thank you so much again for joining us today. You're welcome back anytime you'd like to come back, my friend.
Yeah, thank you for having me. It's an honor to be able to speak to your audience. And yeah, thank you again. Thank you.
Fantastic. And thank you, Brandon. But for now, everyone, I just want you to know that we're here, and we're always stronger and better together than we are not. I absolutely care about each and every one of you. And I'm sending you and your families positive mojo, and wishing you all perfect health, perfect safety. And if you need anything at all, please let me know. I'll do everything that I can to help with anyone, any way that I can. And that's what we're doing these live streams for. So one last thought, one last question. Would you please be the reason that somebody smiles today, and enjoy yourself a beautiful day? We'll see you later. Have a good one until Monday, and we'll see you back.
Yeah. Have a safe one, guys.